Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hope all of you had a very good day of trading today and a beautiful weekend as well. As for myself, guys, truly apologize that I was not here on the Friday market recap session or the top 5 options plays of Sunday, guys. I was pretty much stuck in bed with the flu all weekend trying to recover and recuperate for this week's worth of trading. So my apologies for missing those 2 videos, and apologies as well if my voice is a little bit coarse today. Now, in today's markets, guys, very interesting price action to say the least. Of course, we have a beautiful bounce underway, but it definitely was a very rough start to the month of September so far, especially as of the close of last Friday. As of the close of last Friday, guys, we were down a tremendous amount to start the month of September, and as a matter of fact, the lowest that we had been in approximately 20 years on several indexes. Take a look at this, right? The NASDAQ was down 5.5% at the end of last week, the worst 4 days of September since 2001. The S&P was down 4%, also the worst 4 days of September since 2001, and the Dow Jones was down 2.7%, the worst 4 days of September since 2008. Now, we knew that we were kind of expecting such declines here, guys, as I was showing you in the few prior videos. Normally, in the last 4 years, September has been quite brutal. 2023 down 5%, 22 down 9%, 21 down 5%, and 2020 down 4%. So we pretty much hit those exact same milestones, guys, in only the first 4 days of trading, all of course, except for your 2022, which was truly a disastrous year for the markets. So all in all, guys, September seasonality is a real thing and is plaguing the markets once again. However, after we've hit some oversold conditions, we now finally got a little bit of a bounce going today. So in today's video, guys, we're going to go over a few things together. Number one, I have one earnings report prepared for you guys, and that is going to be Oracle, which came in with gorgeous earnings after the close today. Not much else in the news for earnings this week, except for Adobe. Adobe is going to be the other big one on the Thursday session. Now, in terms of what we're going to do after that, of course, we're going to take a look at our major technical analysis rundown on our major stock market indexes, see how broad the market rally was today, and lastly, take a look at our big tech names and see whether or not there is some deals to be had in big tech right now. And a quick little hint, there definitely is. And thereafter, guys, at the end of the video, we'll take a look at my portfolio to see the new trades put on for this week. So without further ado, let's get right into today's video. So SPY up a nice 1.12%. The QQQ's up a very nice 1.29%, really coming alive in the tail end of the day. We had some very nice early morning rallies and then kind of tapered off into the late part of the afternoon before we got a very late afternoon rally in both the SPY and the QQQs. But before 3 o'clock, guys, it was not looking the best. We were kind of round tripping most of the gains today after your gap up open, but happy to say that the bulls were able to pull it together in the last few hours of trade. So take a look at your heat map right here, guys, and you will see the market was excessively broad here today, exactly what we like to see. Everybody really participating, some big gains in financials, especially your credit cards right here, healthcare having a beautiful day, the defensive side of the market just continuing its upside march, looking very good, and we even had some decent gains across big tech. Semiconductors coming back alive, Microsoft looking not too bad, Apple a little bit flat after its iPhone 16 event today, which, to be quite honest with you guys, was a little bit of a disappointment. And then, of course, Google continuing its slide here because of those lawsuits impending on it, reminding me eerily of the situation Apple was in just a few short months ago when it couldn't seem to break out of the $170 range. And we know the rest is pretty much history now. Apple sitting darn close to the all-time highs. So these lawsuit allegations on Google, guys, in my humble opinion, still remain a tremendous buying opportunity for one of the best companies in the world. Amazon and Tesla also participating very nicely to the upside here today. Take a look at your one-day relative, guys, and you will see that pretty much everything was in the green, and heavily in the green at that. The only downside was communication services, led to the downside, unfortunately, by Google. And then on the 1 week relative, guys, well, only 3 sectors remain green, and it's your defensive sector rotation again, right? Consumer defensives, real estate, and utilities in the green. Everything else really in the red. And take a look here, communication services and technology, guys, still down in excess of 5% apiece in only the last 1 week of trading. So September has definitely not been kind to the rest of the markets, but today we are finally getting our first big day of green of the month. So it remains to be seen, can the bulls maintain this momentum rally into the next few days of trading? We will keep a very close eye on the markets, of course. So before we get into more technical analysis, guys, let us jump right into some of our Oracle earnings, shall we? So Oracle coming out after the close here today with some very, very, very good earnings, guys. Their growth rates, especially for their cloud divisions, are doing fantastically. Take a look at this. Oracle up now about 9% in the after hours after reporting excessively good earnings, and that is a new all-time high for Oracle. So very, very interesting. Finally, a tech company, guys, getting a good bump after hours in their earnings session, right? They have been very few and far between, but when it does happen this quarter, guys, we definitely have to take notice. Maybe this could breathe a little bit of life into tech over the remainder of the trading week. So let's take a look here at their earnings, guys. Beat on EPS by 4.38%. That is a very good beat, and beat on revenue by about 0.5%. So very nice beats overall, and their guidance was fairly decent as well. Let's take a look together, shall we? So Oracle shares jump on earnings and revenue beat, of course, as we just said. So moving on in, for the current quarter, Oracle expects revenue growth in constant currency of about 7 to 9%. Analysts were expecting growth of 8.8%. So coming in slightly under the expectation for their guidance. Now, in terms of their EPS guidance, let's have a look. The company sees adjusted EPS of 142 to 146. Analysts were looking for 147. So as we can see here, guys, companies, especially tech companies, still struggling with that forward guidance, right? A little bit of a miss here on the EPS guidance and a little bit of a miss as well on the revenue guidance. So why did the company go up 9% in the after hours when we know Wall Street was so picky about the guidance this quarter? Well, let's have a look here, guys. It's about the future demand for the company. So demand continued to outstrip supply of consumption-based cloud infrastructure, said the CEO. During the quarter, Oracle announced the opening of a second cloud region in Saudi Arabia and said its database software will be available through Google's public cloud. Very, very interesting here, guys. In a separate statement on Monday, Oracle said it would partner with cloud infrastructure maker leader Amazon Web Services to enable its database services on dedicated hardware. Now, this is very important, guys, because now they have partnerships with essentially every single one of the hyperscalers. So whether or not you're using Microsoft, Google, or Amazon at this current time, Oracle's database cloud-based hosting service will be available to everyone. Very, very, very big opportunity for Oracle as a whole. Now, let's take a look at this right here, guys. Here are the numbers for the quarter, and you will see they are very, very, very good. And the reason that Oracle is up 9% in the after hours, in my opinion, is the return to high-level growth of profitability. Let's take a look here, shall we? So their EPS was up 20% year over year. Very, very good. Revenue was up 7%, as we previously discussed. This is the kicker right here. Q1 total remaining performance obligations. How much money do they have in the pipeline, guys? Up 53% from last year to $99 billion. That is absolutely phenomenal for Oracle, guys. Oracle brings in about $53 billion of revenue per year. So this is pretty much securing almost 2 years worth of revenue for them in the pipeline. Let's take a look at how their divisions did. Cloud revenue up 21%. Cloud infrastructure up 45%. Cloud application up 10%. Fusion Cloud, 16% gains, and the NetSuite Cloud up 20%. Now, we're not going to go through the breakdown of what each and every one of these lines of businesses are, but just understand, guys, in their most important lines of businesses here, everything having to do with the cloud, they are up double digits in terms of growth. That is exactly what you want to see in a market right now that is really punishing companies that are not proving that their AI spend is worthwhile. So Oracle definitely proving that that AI spend is going towards the right places and is showing tremendous amounts of growth in the process. Now let's move on. As cloud services became Oracle's largest business, both our operating income and earnings per share growth accelerated. There's the reason for the 9%, guys. The strong contract backlog, the remaining performance obligations, will increase revenue growth throughout 2025. But the biggest news of all was signing a multi-cloud agreement with AWS, including our latest technology, Exadata hardware, and version 23 AI of our database software, embedded into AWS cloud data centers. AWS customers will get easy and convenient access to the Oracle database when we go live in December later this year. Very good for them. Our database business growth rate is increasing as a result of our multi-cloud agreements with Microsoft and Google too. Soon, customers will be able to use the latest Oracle database technology from within every hyperscaler's cloud. There it is, guys. right? Extremely bullish news for Oracle. Now let's take a look how that's translating to some of their profit margin improvements. As we can see, total revenue is up 7% year over year when measured from this quarter. Operating expenses, however, are only up 2%. So you can see improving revenue a lot faster than they are growing expenses shows that the company has positive operating leverage. That is exactly what you want to see. And as a result, your operating income right here is now up to 30% from the last quarter, 26% last year, of course, in the same time period, which gives you a net income boost, guys. Net income now 22%. Very nice net margins, up from 19% just a short year ago. So those improvements in efficiency, guys, is exactly what's carrying Oracle's stock higher right now. As we can see, take a look at Oracle's profit margin graph. So here's your profit margin on Oracle over the last 15 years. And you can see when they started scaling this data center business, right? You can see what started happening to their gross margins and operating margins and even net margins as well. They started taking a hit, guys. It's completely normal. When you start scaling a new line of business, there's a lot of upfront costs that you have to pay initially, right? Initially, you do take a hit in the margins, but the hope is that in the longer term, you're able to grow these margins back to what they were and even possibly exceed them with the power of scalability, right? So gross margins now will be on the uptick. As we just saw, operating margins now are sitting at 30%. So this line should be coming a little bit higher once the data hits this chart. And even your net margins last quarter were about 19.76. And we just saw in the most recent page here that they're now up to 22%. So very nice profitability increases by Oracle right now. Once again, the reason for the share price increase in the after hours, in my humble opinion. Now let's get into a little bit of valuation here and determine whether or not Oracle is a good deal or not. So Oracle, taking a look, guys, nothing really wrong with the company other than the fact that they have a little bit much debt here. Take a look right here, guys. In the last couple of years, they've kind of increased their debt by, let's just roughly call it about $15 billion. And this has everything to do with the capital expenditures for their data center ramp, right? So completely normal right there. The debt, a little bit of a problem, even though they do bring in about $12 billion of free cash flow per year and are sitting on about $10 billion worth of cash right now. The debt is kind of an eyesore for me. So the balance sheet, definitely not one of the strongest companies out there. I wouldn't say necessarily that it's problematic just yet, but we're going to need to see Oracle start paying this debt down aggressively, which may kind of forego any buybacks of shares, as a lot of the money, a lot of free cash flow they may generate over the next few quarters could possibly be spent, guys, towards paying down this debt, which is a good thing overall, right? In terms of your future growth, look at this EPS trajectory over the next 4 years. No problem for growing EPS for Oracle. And take a look right here. Revenue growth is going to be very healthy as well. So no problems with growth with the company either. So in terms of the valuation here, guys, well, at the current share price of 152, we're sitting at a PE ratio of about 24.3. 24.3 in the history of Oracle, guys, is not that bad, as a matter of fact. Let's just pull up some numbers right here if we can go through some the historical PE ratio, right? So the historical PE ratio for Oracle on a trailing basis, right, is usually always in the higher 20s. At least it has been for roughly the last 3-4 years. Prior to that, it was all the way down in the teens. But then again, Oracle has been growing a lot more aggressively in the last couple of years. So now their trailing is always in the high 20s. So to see them here at a 24.3 on a forward basis is not too bad at all. When we divide this by their EPS growth rate of 15.5% per year, we get a PEG of 1.57. That is truly not bad at all for Oracle, in my humble opinion, guys. However, at the all-time highs right now, with a little bit, the valuation could be better. It's not bad. Oracle, for me, remains a hold right now. Very, very tough for me to buy the company up here or add some shares to the company, but I also wouldn't be keen on selling because we really haven't gotten to egregiously overvalued territory just yet. And as we saw in the report, guys, they are growing in an extremely healthy fashion and improving their net profit margins. So in my opinion, this one would be a hold. Where we become more of a buy for me, guys, well, you might not like this level, but this is just where I would buy it, right? I would need to see a retest of possibly the Black Monday levels down here, talking about 130 down to about 125. So in the event we get hit with more recessionary headlines and Oracle sacrifices all of their post-earning gains over maybe the next 3, 4, 5 weeks, I'll keep this one on the watch list. And if we do come back into the 130 area, guys, That's where I'm very interested in potentially making some swing trades on this one, looking for potentially just the retest on the monthly higher lows, and possibly going for the continuation of the monthly. If it does not come back and pick me up, guys, no problem at all. There is tons of opportunity in technology stocks right now. So very good quarter for Oracle. Nothing more to say on them. No major red flags for the company to speak of. Now, moving into our technical analysis of your market indexes, let's jump into it right away. And just before that, let me get some coffee. And let's do it, shall we? So moving into the SPY, guys, SPY with a very healthy day, but I'll remind you, what are we currently into right now, right? So daily downtrend right now on the SPY is pretty much clear as day. We are just looking out for a potential lower high off of this bounce attempt. Where can we possibly get the lower high, guys? Well, take a look. This is the area that we flushed through earlier last week, right? Starting at about 554, 555, maybe looking for possibly a back test of this location and then possibly for another leg down. Now, keep in mind, guys, we're going to be looking for the size of the bounce, right? The size of the bounce right now is not the best, only about 25%. It's only one day, right? However, if we come back into that 555 location, that would be a 61.8% bounce and could give the bulls enough space to possibly reset into a new daily uptrend to move the markets a little bit higher. That is your best case scenario, of course. The worst case scenario is we do not come all the way up here and kind of retest these moving averages slightly below it, right? That would only be about a 50% bounce and would increase the chances for the bears, at least for a revisit of the lows or possibly even a flush, continuing the momentum to the downside in the month of September, right? So the SPY right now, kind of a tale of being in an in-between location. We're not confident enough in saying that the bulls have it in the bag for a recapture of the daily uptrend. But also, we have put in a decent sized bounce in just one day that any further continuation can set the bulls up nicely, right? So we're going to take this one day at a time, guys, and focus on the price action and especially focus on our sector rotation, right? As of now, the sector rotation does remain healthy, but what the SPY truly needs, guys, they need this guy to come alive. They need the QQQs, right? If you take a look at the SPY and the QQQs, you'll see SPY has not come down too much from its area of consolidation. We know that the SPY had almost a 100% recovery bounce underway, looking for maybe the weekly trend change attempt back to the bulls. Look at the QQQs, however, the bounce size not as good and now already pulling back very hard into that location. So QQQs have been more weak than other sectors. It's really preventing the SPY from running a lot. So on the QQQs, let's have a look right here. Daily downtrend right now is pretty much clear as day, guys, right? Everybody can see it right now. Daily downtrend, as a matter of fact. So when we do get that continuation of the bounce, guys, probably just looking for a little bit of a lower high, right? Where do we need to pay special attention to? 465.43. If we can engulf this location right here, the bulls will be set up nicely to reclaim this big red support zone. It used to be support. Now, unfortunately, since it's above us, it is resistance. So if we can get above that once more, that'll be a break of 470. Could be setting up nicely for a recapture of the daily uptrend to the bulls. Now, in the event, guys, we cannot get above this 465 level right here, and unfortunately, the bounce just fades and we start to roll over. Then, unfortunately, the revisit of Friday's lows are very likely, and the flush follow through is very likely as well. Good thing for us, though, we have very big support below us. 445 down to about 432. However, if the bears take back all of this move, guys, just be very careful, right? That would be too much in my humble opinion. We're already retraced as of Friday. We've already retraced about 55% of the move. So the bulls do not have that much momentum to their names right now. Possibly the best we can expect, maybe just a tightening range on the QQQs. The worst we can expect, of course, is the weekly rollover flush. So I would still be quite cautious and selective in the tech names that I'm choosing to play, guys. There are a lot of opportunities out there, but just recognize what is happening in the markets right now. There's a very big rotation out of big tech, out of semiconductors, and where's the money going? As I've been showing you guys over the last 2-3 weeks at this point, it's going into financials, it's going into healthcare, it's going into consumer defensives, it's going into utilities, and it's also going into real estate. All of those other sectors are far outperforming the QQQs right now. Now, moving into XLF. So tackling XLF, guys, Decent little day here today as well, 1.49% to the upside. So let's take a look right here what we're dealing with. Gorgeous daily uptrend by XLF Bulls, setting up for the daily higher low, which was the low of Friday. And now we are possibly looking for the daily uptrend continuation, right? That would be a break of 45.86. However, in the event we fail and roll over and flush Friday's lows, daily downtrend is underway. And just keep in mind, guys, that we are just looking pretty much for a weekly higher low. Bulls have tons of space. Anything above 40.7, looking for the weekly higher low for possible further trend continuation. I'd be targeting this area right here, guys, this zone of confluence, right? Prior resistance should be current support for the markets, and the 12 EMA is sitting right there. That's about 43.80-ish, right? So that could be a nice little breakout, retest location for the bulls, and possibly run as we move into rate cuts. Rate cuts should be quite kind to financials alike. Moving into XLV right now. So XLV also having a little bit of a pullback here on the Thursday and Friday session, but not looking too bad at all, guys. This is still a massive daily uptrend, right? Or it was rather. So daily uptrend underway, and we kind of lost it right now. But the reason I say it's not too bad, guys, is in the event the bulls are able to V-shape this, they can recapture the daily uptrend without too much damage, right? And even if we were to roll over this move into a daily downtrend, the reason I say it's looking fine, look at this weekly uptrend, guys. Such a good control by the bulls on the weekly. So which is why I say any further moves to the downside, guys, just looking for a weekly higher low, possibly looking for this area of confluence too, kind of like financials, right? 151, 150-ish, confluence with the 12 EMA, a little bit of a breakout, retest, and possibly run for healthcare. Healthcare is looking very, very, very solid. I will be shopping more and more for healthcare names out there, which are presenting good opportunities. The one that I'm really keeping my eyes on, it started coming down today, but didn't give us much more, guys, is UNH, right? I would love to see UNH. I don't know if it's going to do it, but in the event it pulls back here, 560 all the way down to about 550, that would be the most beautiful breakout, retest on the longer time frames, and rally for UNH. So I'm going to be keeping a very close eye on this one specifically. Probably my top pick for healthcare. There are a few more, but this is probably my number one setup on healthcare right now. Now, moving into the next sector, shall we? So the next sector usually is SMH, but we're going to do a quick glance, guys, on the other ones. We don't usually tackle them, but I just want to show you guys, right? We're looking for bullish upside continuation plays. Stick to the sectors that are most favored right now, right? XLP, extremely favored. Gorgeous weekly uptrend, right? Rather than trying to pick the bottoms of the QQQs, let's say, I know everybody likes to play technology, but if we're looking for weekly call options, where's the momentum, right? The momentum is all in XLP. It's all in XLU as well. So we can see very casual maintenance of the daily uptrend right now. The real estate sector as well, right? Every time set the daily higher lows, we're always popping. The 12 EMA is our guide. So we should be favoring these sectors, guys, that are maintaining the 12 EMAs in such a beautiful uptrending fashion, rather than trying to chase the bottoms of some QQQ trades, right? It's not a bad thing to be bidding tech right now. I'm doing it as well. But I'm talking for all you guys who enjoy playing the weekly call options, right? Stick to some of the sectors that are more in favor. I know they move slower, but they're moving in the correct direction right now. Now moving into SMH. So SMH, guys, trying to come back a little bit here today, 2.26% to the upside. And a lot of the names in SMH, guys, did very, very well today. AVGO coming back from their little bit of earnings collapse. NVIDIA having a great day. AMD having a great day. And really everything across the board, guys, pretty green in the markets, except kind of for Micron. So in terms of SMH, guys, we're going to be looking for the same types of setups, right? So as we know, daily downtrend is clearly underway. We'll be keeping an eye on this location right here, 227.51. Our most recent daily higher lows, or lower highs rather, and in the event we get an engulfing move above that 227.50, guys, best case scenario to allow the bulls for an attempt at clawing back as much as they can of this big resistance area, 238 down to about 225, right? If we can start clawing back more and more of this area, sets up the bulls nicely for a possible daily trend change and a possible attempt here, guys, at reversing some of the weekly damage that has been done. This looks a lot like the QQQs, right? Number one, size of the initial bounce, this move right here. Size of the initial bounce was decent, 61%, but it definitely was not like the S&P, 100%, right? So semiconductor is still weak. And now look how much the bears have taken back of that very same move. The bears have taken back, unfortunately, over 61%, almost closer to 75%, right? So right now, the setup that is favored for the SMH is probably going to be a tightening range of accumulation over the next couple of weeks as the sector remains out of favor. very unlikely for the bulls to pull off the pure V shape unless we get some very good market strength in the S&P and the overall QQQs, right? We get some roaring green candles back to back. That'll do it. But if the markets remain somewhat timid as they have been, guys, probably just expecting at best a tightening range, and at worst, unfortunately, a weekly downtrend rollover, which could take us down here, 208 to about 198. And I do not like this overarching head and shoulders setup on the SMH, right? Really leads us to believe that any further market weakness, guys, any bad macroeconomic data is going to send us towards these lows very, very quickly. So please keep that in mind. I hope my microphone's not too loud. No, it should be okay. So that's everything for SMH. I'm still looking to play a little bit of bounce plays on individual names in SMH, but that's all I'm doing, guys. I'm positioning myself for bounces, not so much for the complete YOLO reversal back to all-time high trades, right? So now moving into IWM Russell. So IWM up very weak today, only 0.28%, right? Growth is just not in favor that much over the course of the last few weeks as we deal with these recessionary headlines. So daily downtrend still very, very, very underway. We'll be keeping an eye for the size of the bounce. When the size of the bounce does happen, guys, we need to measure the size of the bounce, of course. In the event we get a fairly weak bounce, let's say we only get a bounce of worth of about 38%, which is right where your moving averages are acting as confluence. Let me delete the fib so you guys can see. Moving averages are kind of confluence right there. If we only get that size of a bounce before rolling over the short-term timeframes, guys, unfortunately, it's not going to get the job done. Probably looking for the daily rollover once again and looking for continued weekly consolidation, right? In my humble opinion, the best that the bulls can do is maintain somewhat of a tightening range for the Russell as we move through these recessionary headlines and as we move through this September seasonality. Growth will probably not be favored very much. Now, where I get a bit more interested in this one, as I've said many times before on the channel, 195 down to 190. I know it seems low, guys, but in the face of continued recession headlines, I need to be getting a very good bargain for growth names. And to me, a very good bargain would start at the 195 to 190. So we'll keep a very close eye on the Russell here, guys, but definitely not looking like one of the strongest sectors as a whole. And now lastly, the Dow Jones. The Dow Jones actually performing not too bad today, 1.2% to the upside. So the Dow Jones doing a great job of trying to claw back some of these losses right now. I'll remind you what we were looking for. Beautiful daily uptrend on the Dow Jones, and then we lost it, unfortunately. So big engulfing move by the bears, possibly just looking for a lower high into maybe lower low continuation, daily downtrend consolidation. What does that mean, guys? Looking for a bit further weekly consolidation for these markets. Anything at this point above 38,500 on weekly, just looking for a weekly higher low for possible further trend continuation. I like this yellow line location, guys. That is almost 40,000. So 40,000 is big previous resistance, should be acting as support for these markets. And we are trying to maintain this beautiful weekly uptrend. I would not be surprised if the bulls put up a heck of a fight in that location. But all in all, guys, not looking too bad at all. We will see how these 1 day's worth of bounces start happening, right? Start manifesting. But all in all, the short-term timeframes, look at this QQQ, right? QQQ trying to set up for the first hourly uptrend since we've been dropping this entire time. So if we get some follow through tomorrow here, guys, the bounce setups could be quite juicy. We'll take this, as we always do on the channel, 1 day at a time, right? Now let's move into our big tech names, shall we? Or actually, let's move into our big tech names. So moving into Apple right now. So Apple with their event here today, guys. And to be honest with you, I don't even feel like presenting the Apple headlines. I mean, you can obviously go look at them on your own. If there was truly something groundbreaking, I would have presented it to you guys. But if you want to know what happened for the iPhone release, the iPhone 16 release presentation that happened today, guys, to be honest with you, not much. Essentially, we're getting an action button and we're getting some AI tech, which is still about a month away. So Apple is releasing their phones shortly, right, in the next 2 weeks. But thereafter, unfortunately, for the AI applications, which will be in beta mode when they launch, we'll have to wait an additional 1 month worth of time. So wasn't the most bullish event for Apple as a whole. They did release a new Apple Watch with some very, very cool features. I like the design and everything, but nothing groundbreaking, of course. And then, of course, we also had some new AirPods. Those actually looked very interesting, further noise cancellation properties and stuff like that. But once again, they're only AirPods, right? Unless you can make them fly, the groundbreakingness will kind of stop right there, right? So all in all, the news event for Apple today was kind of a mixed bag. The new phones do look nice. The specs have been improved, but to say that they are groundbreaking, would be a little bit far-fetched, guys. I'm very curious to see how Apple's rollout of the iPhone 16 will happen and whether or not it will manifest itself into a large upgrade cycle. For myself, I have a bit of concerns, right? This was supposed to be the upgrade cycle, which is going to reignite Apple's revenue growth after Apple's revenue has been flat for the last 6-7 quarters. But I personally, with today's event, even though the products were very nice, and I possibly will be picking up a new iPhone 16 myself, since I still have, I always run about 2-3 generations behind, guys. I don't need the newest phones, as a whole, right? That's just me. A lot of my friends are like that. Then a lot of my friends, they need the newest ones, right? I kind of stay 2-3 generations behind. And then when there's a big change, that's when I get the new one. So the iPhone 16, I'm kind of willing to take the leap into the new iPhone 16, but still, nothing truly ground shattering, right? I'm not racing to the store, lining up as people used to do 10 years ago for the new iPhone, right? So that's just my take on the matter, which is why Apple's share price kind of didn't respond too well to it in the current market. But obviously, I could be wrong. I don't speak for all consumers. If people absolutely love this new generation of iPhone, maybe we will get that upgrade cycle. We will see. We'll have to wait at least 1 quarter for that sales data to start piling in, right? So into the price action right now, Apple daily downtrend coming into our area of support, 219 down to about 214, decent level of support for Apple as a whole, guys, right? Daily downtrend. So now we'll be looking for the size of the bounce. If it continues, if we can break Friday's high, 225, daily downtrend is canceled. And we'll be looking for the bulls to recapture this area, this range bound area of resistance above us, right? Which would technically put an end to our weekly consolidation, right? Looking for a weekly higher low for a possible new attempt at the all-time highs. So Apple currently in its price action category right now, I still can't play it, guys. I still can't play it. Apple is still a hold for me. I'm holding my long-term portfolio shares, guys, but to add up here is a risky proposition. The valuation is extremely high right now, either if you measure that by the PEG ratio or the free cash flow yield, still very, very high, which is why it remains a hold for me. Not quite a sell, right? Because we're not getting into crazy overvalued territory, but also not a buy. And even for some swing trades, guys, I'm really hesitating on Apple for some swing trades. If we can maybe come back down 205 down to 200 in the event of overall broad market weakness, that's where I would consider playing Apple. But as of now, no trades for me. Even though the setup does look kind of bullish for some continuation to the upside, guys, the risk to reward, in my opinion, is just not worth it. Moving on to, there's much better deals in big tech right now, and we're going to go through a few of them, right? So moving into AMD, 2.83% to the upside. Not looking too bad at all here, guys, for a little bit of a bounce play, right? Where are we reacting from Friday and yesterday, and today's close, right? We're reacting from this area that I've highlighted. It is a support level within our larger green box of support, right? Which is your previous, highs in the month of June 2023, back tested as support right here, continues to act as support a few times, right, for this market. So we're in an overall area of support, but we're reacting closer to the 137. Getting a very nice bounce from that area right now. So daily downtrend is still a thing right now on AMD. We're going to be looking for the size of this bounce. If we can start eclipsing a few levels here, guys, well, the true lower high is right here, right? So we need to get a heck of a bounce going right now. So we're going to be watching for the size of the bounce in relation to 149. So far, the size of the bounce is not that big, but take a look what's happening on your lower time frames, guys. Finally setting up for the hourly trend change. This is your first hourly uptrend, guys, since we started dropping from the 160 level. So it has to be notable to us, right? Hourly uptrend reacting nicely from a previous area of support. We could be getting some bounce follow through if the markets remain green for the next few days of trading. So at this point, could be an interesting little intra-week swing trade for some continuation. We have some very close stop loss levels, right? So the stop loss level is very close, 132 to the downside. So that's about $6 worth of downside. And we're probably targeting these highs right here at about that 148. So we're risking about 6 to the downside, 10 to the upside. The risk reward isn't the best, but there is still a little bit of a swing trade here, in my humble opinion. As for what the longer duration bulls are looking for, well, we're looking to put an end to this weekly downtrend, trying to set up for a weekly higher low, to move towards a possible new weekly uptrend. But the bulls have a lot of work to, in front of them to do that. First things first, need to set up for the daily uptrend shift. And then only then can we confirm the weekly higher lows are set, and we're possibly moving on to challenge the 160 level again. So I like AMD, but the way I'm playing AMD, guys, is the same that I'm playing the rest of the semiconductor industry. I'm writing short puts 8 to 10% below the current market, wherever the current market is at the weekly open, right? So if we open today at 134, I would have been writing pretty much in the lower 120 region. Writing options on semiconductors right now is probably the best value proposition because even though they're off tremendously from their highs, we know that the sector's been weak. So we can't really take any chances right now on this sector. So that's why I'm always writing short puts significantly below the markets. And I will continue to do that, guys, throughout the September cycle. Now, moving on to Amazon, give me another very brief moment. Amazon, 2.34% to the upside, looking quite good, but really inside of our last 5-6 days worth of trading, right? So no clear defined price action by Amazon, really in a big tightening range right now. Tightening range on the daily, what does that mean? Well, it obviously means we have to establish our levels, right? Break one to the upside, perfect. Daily uptrend is confirmed anew, and break it to the downside. Unfortunately, daily downtrend is preserved, right? So what are we looking for? We know daily's in a tightening range. What are the bulls looking for here, guys? Looking to set up for a possible weekly higher low for the weekly trend breakout. We are consolidating above a very large area of support, guys. 173 down to about 160. This is your previous all-time highs from 2020 and 2021. I've said this for a number of weeks on the channel in the last few weeks, guys. It's going to be very, very hard for the bears to get through this area without some massive challenges by the bulls that are defending it, right? So that is why I say I love playing Amazon in this location for short puts. Whenever we have a dip, it's in lower 170s, it opens up the short puts, guys. 168, 165, these lower locations right here, great area to be writing options in my humble opinion. And in the event we pull further into them, that's where I look for some longer duration call options or maybe even some call debit spreads. So Amazon is not looking too bad right now. As I've said, the focus is on the weekly time frame, looking to set up for the weekly higher lows for the possible weekly trend change. That would be a break of 182. So we're going to keep a very close watch on these levels here, guys. And if they get that weekly trend change, guys, you already know the monthly higher lows are set. We may just be on for another leg of monthly rallies on Amazon to challenge the all-time highs. Amazon is going to be their best year ever, guys, in terms of profitability and in terms of free cash flow generation. They're finally putting the shareholder first. They've never done this in the history of the company, guys. They've always been a top-line revenue growth company at all costs, right? They didn't so much care about net margins. They didn't so much care about operating margins or even free cash flow. They were all about expanding the business, scale the e-commerce division, scale Amazon web hosting services, right? AWS. So now that they've scaled these things in the past few years, now it's all about profit expansion and returns to the shareholder. And I'm extremely excited for what Amazon has in store for us, not only for this year, but 2025 as well. So I will continue building some positions on Amazon for those two reasons. Moving into Google right now, Google continues to get battered down here, 1.7% to the downside, guys. That's why I say, rather than bidding Apple all the way up here with the revenue growth concerns, right? Why don't we go for Google? Google has been under the gun recently because of the Department of Justice lawsuits, guys. But these lawsuits can sometimes take years and years and years after they're settled to potentially get some recourse against the company, right? If any, maybe it's just a fine, or maybe Google has to readjust some of its business practices. But one thing's for sure, guys, it's going to be very tough, even with a Department of Justice ruling, it's going to be very tough to change consumer and business preferences. Everybody right now, for the most part, we covered this last week, for the most part, everybody uses Google for advertising, guys. They control 75% of the advertising market. It is, for all intents and purposes, even though they say it isn't, it is kind of almost a monopoly. And what the Department of Justice does to change that is not going to have a material impact on consumer sentiment, right? The Department of Justice cannot oblige clients to choose a different service than Google. It can force Google to make it easier to compete against Google. But I mean, when you have 75% control of the market share, it's not so much because people don't have, there isn't competition, right? It's because people don't want to go with the competition. Competition's been around for years and years and years. Whether or not Google tries to retain people within their ecosystem or not is besides the point, right? You have an opportunity, if you're a business owner, to advertise on Microsoft Bing. You can advertise on Yahoo. You can advertise on Yelp. But 75% of people always choose Google. Why is that? Well, it's because they have the most amount of worldwide traffic through their websites. So usually when you are the largest, when you have the most amount of traffic, people want to go with you because you're the industry leader. Now, maybe if Microsoft Bing exponentially starts gaining market share against Google, maybe we can reevaluate this discussion. But as of right now, guys, I would be highly surprised if Google's ad business or their search business is disrupted by these markets, at least for the next 3, 4, 5 years. So this does represent a tremendous discount for Google, guys. We're literally trading now. We have to redo this again. So let me do the PEG ratio again at 149, right? And you guys will see how crazy this valuation is really getting right now, right? So 149 divided by your EPS, 2024, 764, they're trading at a 19.5 PE, guys. I mean, we haven't seen Google at a 19.5 PE since 2022. And when we divide that by their EPS growth rate of 17% per year, we get a PEG of 1.14. This is the best valuation right now in all of big tech. The company, for all intents and purposes, is cheap. We're not even talking about fair value anymore. The company is actually cheap right now. So I love it in this location right now. Yes, the short-term trends are against us, but we're coming up into a very large area, guys. Weekly previous all-time highs should be newfound support for the stock. And we are possibly to the maximum pain levels, guys. Maybe just looking to fill this little gap that we have right here. This little gap was the one created back there in the month of March. This was off the AI partnership with Apple news. From what I recall, and that is all the way down to roughly 143.50. In my opinion, that is truly max pain area for short term for Google right now, but is looking very good, guys. A couple other oversold indicators. Keep an eye on this. Google on the daily RSI now is down to 26.43. I put a line right there, so let's go see all the times in the past. Has it been a good buying opportunity when Google comes down to these low levels? We have a few opportunities here in 2022. As you can see right here, Google coming down, and then as soon as we hit those 26 levels right here, getting a little bit of a bounce and some follow through thereafter for kind of unraveling in late 2022, because 2022 we know was a disaster for the markets, right? Once again, coming down 26.43, ensured a little bit of a bounce. Let's move further back in time. The early onslaught of 2022 as well, January 26 RSI, on those levels, and we did get a very nice bounce thereafter. And we can keep doing this analysis. The last time was in COVID, the depths of COVID here, guys. 26 RSI on the daily, beautiful bounce. 2019, 26 on the RSI, nice little bounce underway. Obviously, I'm not zooming in, but you guys can understand the point, right? Usually it starts to be a good opportunity to start some bigger positions on Google. Now, moving into the technical analysis, guys, well, the bears control pretty much everything at this point. No secret there. Daily downtrend clear as day right now. So any form of bounce, just probably going to be looking for a lower high. Now, it all depends on the size of the bounce. If we have a fully engulfing bounce, you can say that the bulls are set up nicely to recapture this daily uptrend and start reversing a little bit of this weekly downtrend momentum, right? However, if the bounce size is weak when we do get it, possibly going to revisit lower locations within the support range, which is all the way down to about that 143, guys. Looking extremely solid on Google for some longer term share buying opportunities, guys. If you have been, if you felt FOMO for Google this entire time here, right? You wanted to buy it and didn't this entire time, and now you're questioning yourself whether you should buy it, right? This is the time. These are the times, guys, that we need to be buying, right? We can't have FOMO this entire time and say, oh, I wish it would come back to this level so I can buy it. And then when it gets here, we don't buy it, right? We have to be picking up these gorgeous companies, guys, if Google is a high quality conviction stock for you. Obviously depends per person to person. For me, it is, which is why I say it. So weekly downtrend, clear as day right now. We'll be monitoring the size of the daily bounces when they start happening. As of now, bears are in full short-term control. But as I've been saying, guys, this eerily reminds me of Apple when Apple was having its destructive price action all the way back here. And when everybody was saying, no, it's finished for Apple. We're going to go all the way back down to 140, 130. People are saying the same things about Google right now. Remains to be seen if that will be the case. But one thing's for sure, guys, Google, 23% off the all-time highs. I'm definitely buying. Now, moving on to a little bit of Meta right here. So Meta not performing too poorly today, 0.9% to the upside, but Meta as well, kind of stuck in this daily downtrend momentum, right? So we'll be keeping an eye on the size of the bounce right now, but as a whole, bears in full short-term control. Keep an eye on the hourly uptrend shift. If we can get that, guys, Meta can possibly put in a little bit of a rally here. We are dealing with very large resistance above us. 532 down about 515. Big all-time high resistance, guys. We've tried it 5 times now and have failed. So in my opinion, we are still moving into a little bit more weekly consolidation for Meta, trying to find some weekly higher lows for a possible new all-time high attempt. It's not looking too bad, but one thing's for sure, if we do come down a bit lower, it's going to open some swing trade opportunities for Meta as well. I like this one, 481 down to about 450, this lower bound of support, guys. This is where I'm going to be looking to play Meta a little bit more aggressively, both with some call debit spreads to the upside and possibly even some put credit spreads below here. Now we're kind of really in an in-between location, right? So as of now, no trade for me, but I am still holding all of my longer term shares, of course. Now moving into Microsoft looking very, very good for a swing trade. Let me explain. So daily downtrend, yes, is underway on Microsoft, but look at the short-term timeframes now. We are trying to put together a hourly uptrend shift, right? We're actually getting there right now by cracking the highs, or rather the highs of 12:30 p.m. If we can break this tomorrow, guys, that's pretty much your 406 level. If we can break this, hourly uptrend is confirmed, and then we may be looking, guys, for some follow through on Microsoft. Need to get as high as possible in relation to 420, guys. If we can start challenging 420, sets them up nicely for a daily uptrend reversal, or rather the complete engulfing move and then the daily uptrend reversal. But look at the weekly, guys. Weekly bottoming out in this location right here. This is pretty much 403 down to roughly 392. I like making plays off of this level for Microsoft, guys. So tomorrow, keeping in mind, we've had a nice little rally here, there is an opportunity, guys, for some long swing trades, right? The stop loss goes very tight below here. 400 can be our stop. We're risking $5 to the downside, and the upside potential is all the way up here, about 420, right? So the risk to reward is very, very juicy on Microsoft right now. That's either for shorter duration call options or even shares, if that's your thing, right? So there is a little bit of a swing trade on Microsoft right now based off of this large support area and the fact that we're rejecting nicely from the 200-day moving average, which is this green line right here. So I like Microsoft for a swing trade, but I also really, really, really like it, guys, for some longer term share buys for a longer duration portfolio as well. I have been adding a little bit of Microsoft at these lower levels, both in the swing trading account and the longer term portfolio. I love it. Can't go wrong with Microsoft now that it's down roughly 15% off the all-time highs, guys. Great buying opportunity in my opinion, but keep a close watch on how we continuously react from these lower support bounds right here. The last thing you would want to see from Microsoft is kind of setting up the head and shoulders, guys, and losing this location following Google down here with the weekly downtrend. Then we would come down into the leap call buying territory. So for now, still on Microsoft, for me, it's a little bit of a nibble. But if we come down here, guys, 375 down to about 350, this starts to be leap call buying territory, because at that point, Microsoft would be down as well, 23%. When big tech comes down over 20%, that's where I usually get very, very interested in some leap call opportunities. Now, let's move into Netflix. Give me another quick second. Sorry, guys, still a little bit sick there. So moving into Netflix right now. Netflix not looking too bad today, but still rejecting from our overhead resistance, right? 697 all the way down to roughly 675. Big location of resistance for the bulls right now, so daily downtrend is still clearly underway. As soon as we can see a new daily uptrend form, then you'll know that your weekly bottoms have been found. But right now, I'm still not convinced, right? The bears still do have short-term control right here. So if we continue pulling back on Netflix, I'm targeting this green box right here, which is going to be previous support, or rather previous resistance for the markets, previous support as well a little bit. So we should be targeting this location right there, 655 down to about 630, maybe just due for a breakout, retest this location, and then possibly run for Netflix. Nothing wrong with this business at all. As a matter of fact, the monthly uptrend looks better than most companies out there, still trying to attack the all-time highs. We're not closing above them, and we haven't secured them just yet. It's going to be kind of hard for Netflix to do that, especially when the overall tech industry is kind of weak right now, but there's definitely nothing wrong with this business. So in the event we come down further into this location right here, that may open up some swing trades right now, but as of now, it's kind of an in-between location, right? For me to buy this one, I really need to see a breakout and retest from the all-time highs. That would be a long form opportunity for me, or come down in this location right there, give me some oversold short-term timeframes, and we can try and pick the weekly higher lows for a bit of continuation back into the all-time highs. So right now, no trade for me, but one of those two situations would definitely warrant a trade. Now, moving into NVIDIA looking not too bad, guys. 3.54% to the upside, looking quite good. This one is exactly like AMD, right? Keep an eye on the short-term timeframes. Hourly uptrend is now underway, so we could be expecting some bounce follow through for NVIDIA. First hourly uptrend, guys, since we started dropping from the 130 area prior to earnings. So it has to be notable to us. In the event we start mustering up that daily bounce, we're going to take a look at the size of the bounce, of course, because it'll be in relation to this guy right here, 130. So we need to put in a lot of size, guys, on this NVIDIA move, right? So I'd like to see them come up at least as high as about 115 up to about 120. If we can put in that size of a bounce on NVIDIA, it would be very, very healthy for the bulls. 50% or 618 at the highest point, the 120 mark. That would set up the bulls very, very nicely to be to have the opportunity, rather, to set up for a new daily uptrend and start reversing a lot of this weekly damage, right? As we know, we are still kind of in a weekly downtrend right now, but as I've been saying in the last 2 weeks on NVIDIA stock, maybe the best we can expect while semiconductors remain weak, while the growth story kind of remains a little bit timid in those stocks right now, the best we can maybe anticipate is somewhat of a tightening range as tech continues to be out of favor, right? Kind of the same as we got last year in or around the same time period. A sideways consolidation for NVIDIA would not be the worst thing at all. So I maintain the one way that we can play this, guys. On the upside, there is a little bit of a trade to be had right here. Since we do have the new hourly uptrend, we can go for some follow through. The stop loss, very simply, if we're trading call options or shares, stop loss goes below here, goes below 101. Where are we targeting? 115 to 120. So the risk reward is fairly decent. We're risking $5 to make possibly $10. That is a 2-to-1 trade capacity, right? Not too bad, but another way of playing this is by writing short puts significantly below the current market. The one thing that's nice about semiconductors right now is the volatility. So usually on any given week, if we start off the week red, usually we can start writing some put options 8 to 10% below the current levels right now. I was looking at it this morning, guys, all the way down 93 and 92 puts, we're still paying 0.5% for the week. And that is at the lower end of our range of support. So juicy opportunities, guys, right now, whether you want to take a short-term swing trade or whether or not we're looking for some short put action below the lows. Now let's move into some Tesla action real quick. So Tesla not looking too bad either, 2.63% to the upside, but they got a lot of work to do to recapture Friday, right? So Tesla kind of trapped in an in-between scenario right now. I wouldn't say it's bullish. I wouldn't say it's bearish. It's kind of just in the middle, right? So tightening range of accumulation once again, and no real action on the weekly, guys. This weekly is extremely, extremely mixed right now. The bulls are trying to set up for the weekly higher lows for the trend change, but it just seems as though they cannot break out, right? So we'll keep a close eye on Tesla. But as of now, guys, very, very tough to pick a direction for this one. It's kind of being pushed and pulled by its own news release events, such as the Robotaxi event, but then it's also getting pulled down by the weakness of the overall market. In my humble opinion, guys, it's going to be very challenging for Tesla to start attacking these 260, 270 levels. There just isn't that many bullish catalysts in the short term for this stock to be had, much before the early parts of October. So I'd be very hesitant with this one. One way I do want to play it is in the event we start breaking down here towards the $200 level. I may be interested in writing some short puts, maybe around 185, 180, leading into that Robotaxi event. But right now, guys, it's kind of directionless, right? Very, very difficult for us to be basing a trade off of because there's the price action is just really mixed right now. So I will be patient, and in the event we come down and tighten up this range a little bit more, I want to be picking the lower end of this $200 range for some short put action below there. And now lastly, Palantir. It wouldn't be a video without talking about Palantir, right? So Palantir getting included in the S&P 500 after the close on the Friday session, and the stock responding excessively bullishly to it in the market trading hours today, right? 14% to the upside. But now, guys, the valuation, even for Palantir, I know it's been going on a tremendous run. The valuation, however, right now at around $34, which is, almost 10% higher, this is going to be close to a 4 peg, guys. Even for such a great company, the valuation right now is a little bit concerning for this stock. Very tough for me to add any positions up here. That being said, overhead resistance, 35, 32, and then all the way up to pretty much $39. So not that much resistance left ahead of us right now for Palantir, right? What we've been wanting to do on Palantir stock for the last couple of weeks is play these retests of the highs, right? And they played out very, very well. As you can see, weekly uptrend, back testing the previous location. So we've got the breakout, retest of the range, and run. So Palantir right now, it is gone. It is a hold for me. If I have some long-term shares, I am holding. I'm not selling. I'm not buying more. I'm just holding. But even for swing trading, guys, it's getting very, very rich. I'd be very, very hesitant to chase the stock up here, guys. The risk to reward is just not there for me anymore. So what I'd be more keen on seeing is a little bit of a pullback. If we can pull back maybe into the 32s, Possibly it frees up some short put strikes in the lower 30s and higher 29 region. That is what I want to do with Palantir, but one thing's for sure, I'm not chasing it up here. So it's a hold for me right now. Congratulations to all the bulls out there for our tremendous gains in this stock, especially a lot of us guys that have been having shares. We've accumulated shares in this lower location down here. It's been a heck of a ride for Palantir, and I cannot wait to hold the company for years and years and years to come. In my opinion, guys, this is the one true AI, the one pure form AI play in the markets right now. And I think they will continue to deliver outsized returns. It's just at these current prices, at their current valuations, it's a little bit rich for me. And now lastly, in terms of our portfolio position, so let's have a brief look into my portfolio, shall we? So we're going to be going through these a little bit quickly because not much has changed. So as of last Friday, there was a few positions that we closed. I think I showed them to you guys. We don't have them anymore. TSM, we closed at a profit. We also closed Charles Schwab at a profit. And the rest of the trades that we had, the wheel plays, a lot of them have been assigned. So here's how I'm playing my assignments. So Ally Financial, a new assignment at $40. As you can see right here, guys, the reason I like $40 on Ally, well, because it's a very, very strong support area.